The macroeconomic environment is expected to remain challenging right throughout 2019. GDP is expected to rise modestly by about 1.5% this year, which is slightly ahead of last year's levels. Consumer spending, which accounts for 2/3 of the economy, will rise modestly compared to long-run averages. Our forecast is growth of about 1.4%. However, the backdrop for households is likely to improve as inflation falls towards our forecast of 1.9% by the end of the year, and a tightening labour market will push real wage growth up to about 1.3% in the final quarter of 2019. However, all of these forecasts are predicated on a smooth exit from the EU. In the event of a hard Brexit, we expect to see significant disruption to economic growth, trade, consumer spending and inflation. Our own research showed that for the retail sector alone, a no-deal scenario would add £7.8 billion to the cost of sourcing goods in the UK. Most of these costs will fall disproportionately on food and clothing and footwear. What's more, we also conducted a survey of UK retailers which account for more than £100 billion worth of sales. A third of them said that they feel very underprepared or had done little to no preparation for a no-deal scenario. In terms of the retail sector, the underlying environment will remain tough. Challenges from the shift in consumer behaviour will continue to put pressure on traditional business models. The continued migration towards online, the importance of the experience economy, fiercer competitor dynamics, and rising operating costs will challenge existing business models. Retailers will remain locked in a heavily discount-driven environment, and this will put profitability under intense pressure throughout the year. In fact, operating costs by our estimates are expected to rise by 3.5%. Retailers will continue to look at streamlining operational efficiencies and taking a forensic approach to further reducing their cost base. For many, this is likely to involve a further store reduction, cutting back on hours worked, and also on the number of staff. Indeed, if you look at figures for 2018, retail industry lost 93,000 jobs. This was by far the most of any major sector in the UK economy. We expect to see further job losses in 2019 as investment in technology replaces low-skilled workers, but those left working in the industry will be more highly skilled and demand higher wages. Consumer sentiment is also expected to remain weak. Retail Economics conducted a comprehensive survey at the beginning of this year, and what it showed was that 41% of consumers feel that their personal finances will weaken in 2019. However, there was a noticeable difference by income group. The least affluent households were more pessimistic than the most affluent households. Our research also showed that people were more wary about their job security and also more worried about levels of debt and lack of savings. The property market will also become increasingly polarised as retailers continue to restructure property portfolios and apply much more stringent location and cost requirements when selecting new properties and also when extending leases on existing space. So overall, conditions are expected to remain tough, but significant uncertainty remains over the outcome of Brexit.